Good morning, everyone. Welcome to the Daily Trader with Kevin Hincks. We have two names for you today. Paper money trades in an earnings play in Nike, and then we'll look at Boeing, which has news out and some good news. And this is a stock that is starting to get interesting. Let's put it that way, on the upside and the prospects for next year. So let's look at Nike, which comes out with earnings after the bell today. Now, Nike has had a horrible year. The stock is down 37% in the last 12 months. It's down 10%, 10.5% in the last 3 months as competition from Viore and On Semi and other competitions seem to be nipping at the heels. How do we know? Nike's growth is 3% a year, where smaller companies like Viore and On Holdings are doing double-digit growth. So these small competitors are starting to chip away at Nike. Two areas where Nike has to reestablish itself as leadership: running and lifestyle. What do I mean by lifestyle? Kind of a Lululemon idea with Nike. But this stock has been so beat up, comes out with the earnings after the bell today. How do we look at it? Well, bullish or bearish, the interesting thing about Nike's earnings report and why I wanted to cover it today is the makeup of the options structure, which means what? The front expiration with 1 day to go to expiration is trading 186 aggregate implied volatility. 186. The second expiration, 8 days out, is trading an 81 aggregate implied volatility. That difference between those two makes something happen, which is, if you look at the expected move, about $6.50 is the 1 day expected move in Nike post earnings event. That takes you up to about $82, $83, right? In this case, we're going to do the 82 call calendar. And right now, that call calendar, buying the D's 27 82 call, selling tomorrow's expiration D's 20 82 call, is trading 30 cents. We put it in 30 cents. It's probably trading 28, 29 cents now. So what does it mean? Very inexpensive. Doesn't mean you're going to be profitable, but very inexpensive. Why is that expensive? Because the implied volatility of that front expiration is so high. The 82 call with 1 day to go and $5 above the market is trading about $1.50 and change, right around $1.50. That's how high the premiums are. That's something you can take advantage of. Now, you could do it on the put side as well. If you think Nike has a chance to go down, you could do the 71 or 72 put calendar, and that's trading probably a similar price. You can price it out, or you could do both and do the double calendar. But for our purposes today, we're just doing the call calendar, buying the December 27th 82 call, selling the December 20th 82 call for a 30-cent debit. You're collecting theta. You are risk defined to the debit paid. So if you do a one lot trade, all you have at risk is $30. So that shows you the difference between those implied volatilities and the discount that this trade may be. Does not guarantee you're going to be profitable. You still need a bullish play towards that 82 strike. All right, make sure you understand that, because you are long deltas in Nike. Okay, there's our first trade. Now Boeing. The second one is Boeing. Now Boeing has got several news stories out today. The first one is TD Cowen put a price target of $200 on it, a buy rating up from 190. They call it one of the dogs of the Dow for 2024, which is actually bullish for 2025, if you know what the theory of the dogs of the Dow are. Also, they just received orders for 10 777-9 aircraft and 4 777-8 freighters. So, 14 more planes ordered to add to its backlog. Also, they started production on the 767, the 777 to add to the 737 that they already have started production on. So what does this mean for Boeing? An overall recovery, right? When they get to deliver planes, get those deliveries up from 38, where they currently are now, up to a goal of 56. Every time they deliver a plane, they bring in free cash flow. Every time they deliver a plane, their balance sheet gets better and their overall earnings picture gets better. Remember, a year ago, I wrote this down, December 21st of last year, Boeing was trading $267 before all these new problems started. So this stock still is about $90 off its high from just a year ago. And if you look at a longer term chart, this stock was a $450 stock at one point in its history before two crashes and problems with different parts of the plane. So let's get to a trade in Boeing. For Boeing, we looked at the January 10th expiration, going out 22 days, about just a little over 3 weeks. Buying the 175 call, which is right at the money. The stock's currently trading 174.76. Buying the 175 call, selling this week's, tomorrow's 180 call. That's we put that trade at about 635. It's trading about 620 now, as the stock has backed off slightly. Now, couple things. Right now, it's trading $6 and let's say 20 cents, because that 180 call on tomorrow's expiration is trading about between 45 and 50 cents. Still a significant level of option premium. Could you go to next week? Yes, you could. But why waste that premium that you have to tomorrow's expiration when you can take advantage of that? If it doesn't get to 180, extend duration into the following week and do that for a credit as well. So those are the things you look at. If it was trading a dime or something like that, or 15 cents or a very low level, it might not be worth it to do that. And maybe you look to the following week. But something trading 45 to 50 cents in Boeing options, that's worth still trading with a day to go in expiration. Remember, because as you get closer to expiration, which tomorrow at 3 o'clock Chicago time is expiration, the rate of theta picks up. So with a 45 to 50 cents on that option, still a significant level of premium. So buying the January 10th 175 call, selling the December 20th tomorrow expiration 180 call. That's trading about, like I said, we put it at 635. It's trading about 620 now. So two trades today, an earnings call calendar in Nike. Remember, you could also do the put calendar if you're bearish on Nike. This is a bullish trade. And then a bullish long call diagonal on a flurry of good productive news in Boeing. That's the Daily Trader for today. I'm Kevin Hincks. Have a great day, everybody. We'll see you tomorrow with another edition of Daily Trader.